Good afternoon. Welcome to Options Center. D. Wayne here, your host for this weekend edition on Options Center. We're going to show you a weekend update. I just want to talk to you just for a second about what's happening in the market. We're just getting these super narrow tight ranges, and it feels very ominous. It feels like we're just tightening up so much and we're just going to burst, whether it's to the upside or downside here pretty soon. And I just wanted to point that out to you. There's a couple wave counts that we've touched on in the past few weeks that are super bullish to the upside, and those can still play out. But we're kind of leaning into this to the aspect of us pulling back a bit for wave 4, to be precise, and coming back and consolidating and restarting our wave 5 of 5 in this situation. So, the things are, we don't have any bearish signals at this point, but what we're going to show you are some tea leaves that point to us that we're just not quite looking like we're ready to burst to the upside. And in fact, that we may pull back pretty soon here. Okay, so to the charts. All right, looking at SPX, we're going to go through SPX on multiple time frames, check out SPY with the volume, and end off with the options expected move. Then we'll move on. We'll end the free video there, and we'll move on to the Patreon video, touch on Elliott waves, and then also finish the more in-depth market analysis. Let's look at SPX on the weekly. We are working on wave 2. 1, 2, and on wave 3, we're getting really tight, extended here on wave 3, follow through candle, but everything is bullish. We're over the trend lines, we're over all the MAs, we're just showing a little bit of divergence on the MACD and the RSI, and as a matter of fact, the RSI is starting to curl up to the just a little bit. Will we make a new high? We'll see. Now, we do actually want to make a new high in the RSI, and that will work really well with us burning off that divergence, making a correction, and then coming back up for a wave 5 price action on the Elliott wave, but the RSI and MACD not making a new high, which would give us a last bit of divergence before we make a much larger correction. So we do want to see a brand new high on that RSI, maybe somewhere around a 73, 74 strength. And moving to the daily. Daily trend is our friend. Now, we've been talking about this expanding diagonal. That's just our conservative move that brings us to a correction. There are much more bullish counts that we've gone through, and we're not gonna work on those yet unless we start breaking above this some of these pivots. So right now we have an ending diagonal. This will be wave 1, 2, 3, 4. Working on wave 5. Wave 5 has to be bigger than wave 3. Wave 3 has to be bigger than wave 1. Has wave 5 exceeded wave 3 already? Yes, it has. We've hit that 100% mark, and now we are wide open. The formation is complete. It doesn't mean we can't go any higher, but the formation has completed, and we can correct at any time now. We do have a couple references to the upside. We do have a 1.27 and a 1.618 extension. So either one of those are good targets. 45.23. We don't have to hit those targets. Okay. But they're there for our reference. We're at all-time highs. We have no other way to really pinpoint where our pivot will be. Now, expanding diagonals do not always hit the top of their expanding references. So we do have a a wedge top up there, but we'll look at the expanding diagonal actually is not drawn on here, but we'd go from the top of wave 1 to wave 3. And we come to just about the same point at the wedge. So we can reach the top of the wedge in that 127 point. There's confluence there, but we do not have to reach that area before correcting. It doesn't always complete at the top of the range. Okay. So moving on to let's go down to 65. We don't usually go down to 65-minute chart, but I just want to show you a little bit more in depth. Okay, so a diagonal is comprised of 5 3-wave moves. In this case, expanding diagonal, we still have 5 3-wave moves. This is the last wave. We're working on that last wave right now. And so we have an A, B, and working on wave C. An ABC pattern has a smaller A, B, C in it, and it also ABC correction, and now a 5-wave impulsive move to the upside. So we're looking for 5 waves to end this. We have a wave 1, 2, working on wave 3. Wave 3 may end at a typical 1618 spot. That's a 44.80 before we start correcting either sideways to down, and then resuming to the upside to complete wave 5. Now, it's hard to get these counts in here. So have we actually completed wave 3? And that's wave 4 right here. And we're pushing wave 5? Could be. We're going to have to watch price action. And that would tell us. But 1618 is a typical wave 3 ending. Okay. So let's move over to SPY. SPY on the daily. Daily trend is our friend. Okay, so on the SPY, we're just looking at volume. Desolate. There is no volume. There's no trading. Excuse me, you guys. Let me pause this for 1 second here. Okay, all right, getting started again. Had to clear my throat there. We have no volume. No volume right now. We're grinding to the upside, so we're not getting any confirmation that moves right along with our analysis, that with our idea that we might be correcting soon. With the MACD waning, we have all these divergences. We have no volume. This ending, this expanding diagonal. All these things are just giving us these tea leaves. Now we have to watch price action. Will we get under the 8 MA? If we get back under that 8 MA, we're gonna go pretty hard on the bearish side. We're gonna push pretty hard. But you have to know when you're wrong. You can't keep fighting it. If we get back above that 8 MA, we will flip. We will flip real quick to bullish again. So that's how we're playing this, you guys. We're playing what the price gives us. Okay, so I just wanted to make that clear. We're gonna end this off for the free version with SPX on the expected move. And just I want to show you, I want to reference to a time sometime back. If you notice these options expected moves are getting tighter and tighter. We've been moving pretty much sideways, just grinding to the upside, riding that 8 MA, but we're not hitting the top or the bottom of these options expected moves. That just means that we're grinding, we're tightening up like a spring, and we're ready to move either to the upside or downside pretty soon. But I do want to refer back to, let's see, right before the Corona crash, she had this huge move here. And you see the tight range, but you just kept grinding. You got a little bit of a correction and the dip was bought. Tight range. So this is what would happen. We dip under. We're going to be bearish. We're going to watch. That's a bullish candle, so we wouldn't play that to the downside, that gap down. But we got back above the 8 MA. You turn back bullish. That's all you can do. We would definitely try to play this to the bearish side. We closed underneath the 8 MA, right on the 20 back then, but you see the grind, the slow grind that happened, real tight on the options expected move. And I don't expect another coronavirus, corona crash. Got super tight up there and then just crashed. We're not looking for that, folks. We're just looking for a wave 4 correction in our move. But just want to show you that options expected move. It just gives you a playing field of what we're looking for. It gets tighter and tighter. We see that we're tightening up and grinding to the upside. And when it starts expanding, you can see that we're starting to have some corrections. We're starting to move a little bit faster and bounce. Candles are larger. It's kind of like just like one of those caveats. It's kind of like one of the, we like to look at this and show you this one, for example. You see the options expected move was just to the side. So we're grinding sideways, and it just kind of shows that we are. It validates it. All right, but that's it. That's enough with the options expected move. The options expected move for next week is 47 points to the upside or downside. Let's see what happens. Thanks for joining us here, Options Center patrons. Stick around.